Hello guys, and what's up everybody? It's on a Friday. It's about the weekend. I'm thinking it's around over here. It's around 10 p.m. So few hours to Saturday, and hopefully everybody's good. Hopefully everybody Friday was okay, and yeah, and hopefully things are going on soft and smooth so far, and hopefully we're getting to get better uh, in these chats every day. And today we had an opportunity to learn, and for sure 100% I've really got so many things to talk about, and I'll try to do this video to be short enough so that yeah, we may get to it's maybe engaging and also be short. So yeah, so as you can see, today we had a trade, and over here our stop loss was my stop loss was triggered. Then we had these drop down, but before that I would like us to go to the higher time frame, and on the higher time frames I would like to use another chart, a cleaner chart, the silver, from which we can have our analysis from a cleaner chart, and also get to tell you what I had seen today, something worthwhile of learning, and how I did enterprise. I interpret price today. By the way, my earlier draw on liquidity was these lows over here. So this was my draw on liquidity for today. I wanted to see the market go below there, which did happen before my trading session, and yeah, I was kind of frustrated seeing, not kind of frustrated, I really didn't want to see this low taken out before, but it was cleared before, and yeah, this is the markets. So why was this my draw on liquidity, right? Why was this my draw on liquidity? You can see today's candles, this one, this one, this one, this one, so far. So I had seen this candle form. You can see this 21 on Thursday 9 p.m. This candle had already formed and closed. So during one, this candle started, today one, and what made me to be bearish was, we can see the order flow here from yesterday. We had this fair value gap here that was tapped into, and we had closure below these order blocks with this candle over here. These candle rallied higher, tapped into the order block as well as the fair value gap, and then we had this sharp drop lower, and from this candle we can see it closed below this fair value gap, meaning now this fair value gap turns into an inversion fair value gap to support a price lower. So let me draw it so that we may have a clear picture, and over here, and use my colors for that fair value gap. So this is the 4-hour fair value gap, and you can see how these candles were respecting the constant encroachment or the midpoint of this fair value gap, whereby the bodies were telling the story but the wicks were doing the damage. So you can see the bodies were closing below the main midpoint of this inversion fair value gap now, but this wick tapped into this order block. Then we saw this rally higher, lower I mean, and if it were to be bullish for me, I had two levels I was watching. I had you can see, let's first use these. No, sorry, these yeah, these weak, right? So you can see this candles weak. I wanted to see, if I was bullish I would have wanted to see this candle not closing above the constant encroachment of this week. As you can see, the 50 level of that week, if maybe the market would reverse to bullish, that's what I was expecting to see. But since it closed below this candles low and also below the constant encroachment, and expecting this for our inversion fair value gap, then this was my draw on liquidity, right? So yeah, I was watching this candle, it closed as I wanted. Now I was watching over this candle over here, and what I marked is, let me mark this immediate rebalance of this 4 hour, because from this point I learned something new. And yeah, I guess you can see the red line is this candle slow, whereby I wanted to see the market tap into it, then rally lower as it rallied. So I had this level in my chart, but dropping to the lower time frames, what I spotted, we had these 3-hour fair value gap here, and I'm marking it exactly as I had marked my charts. I'm using this because it will be kind of cleaner, and I'll be giving how I'd seen price before. So my other chart is so dirty, so that's why I'm using this one to explain how I did trade price. So you can see this 3-hour inversion fair value gap. Because why is it an inversion fair value gap? Because we can see over here we had this busy buy side imbalance, sell side efficient. It's a gap whereby we don't have sell side being delivered into it, but later on we saw this down close candle of a sell side delivery, making this balanced. But now, since it was in a fair value gap that was to support price higher, and now it has been violated, now it should resist, or it should act as resistance, pushing price lower. And we can see this candle how. So I was watching by this candle at around 5, so it was my because I wanted to see this immediate rebalance. I guess you can see the pink line. Let me make it thicker and the two. So I wanted to see a 4-hour immediate rebalance, and I wanted to see price tap into this 3-hour fair value gap, right? And yeah, we can see it was tapped into. Then we had this rally lower to our draw on liquidity. But something by the I didn't take that trade, though I was expecting this to happen. I didn't take that trade because of the reason I'll be giving as we drop lower to the lower time frames. So inside the 2-hour time frame, what I saw was we had this fair value gap that had been created from this candle's low to this candle's high. We have this CB, sell side imbalance. It's a sell side imbalance lacking buy side delivery, right? So we can see it was triggered, then we had this sharp retracement lower. So why couldn't I have taken this trade, right? So my reason is back to the 1-hour time frame. So I had this 1-hour fair value gap, this candle's low, this candle's high. We had that fair value gap. To me, using my gene box, I don't know, GAN box, from that high to the low, yeah, that was the low. Was that really the low? Yeah, that was the no, it was this one before this one was created, it was this one. So I wanted to see a retracement to premium, right? So it was a key level for me, like since it's a fair value gap inside premium zone, also paired with this 4-hour order block. So I was waiting to see a retracement into this level, then sell off. But what happened is we tapped into the 3-hour inversion fair value gap. So we tapped into this inversion fair value gap, kind of fully filled it, and creating an immediate rebalance. Let me see whether we had a fair value gap. This candle's low is 26,970. This candle's high 26,940. So we have a slight gap there, 940 to 970. Yeah, we had a gap there, so an immediate rebalance was not created. But inside this 2-hour fair value, 2-hour time frame, we can see this fair value gap. Let me clear this. We can see this fair value gap that was created, tapped into it, then we had this rally lower to my draw on liquidity. So after I had seen that my draw on liquidity had already been tapped, so my next move was I changed my draw on liquidity from that low to this low. That's what I did, and I dropped because everything has been balanced, and from the higher time frame, because this candle had already closed, at around 9. So I wanted to see the market rally higher, right? You can see over here, create an immediate rebalance with this candle over here, create an immediate rebalance, then rally lower. So also let me use this one. So I wanted to see an immediate rebalance. Yeah, you can see that red line is it red or pink, was the key level I was watching. I wanted to see it tap into this level, create an immediate rebalance, because everything from above is balanced. As you can see over here, we have everything balanced. This wick is overlapping with this wick, there is no imbalance. So I wanted to see also an overlap over here, then rally lower. So that was my interpretation for the day. And what happened, so I dropped to the lower time frame to show you how I did read my price. So what I observed is at around this key level, we had, I'm anticipating to see this tap or this creation of an immediate rebalance, then rally lower. But above it, I spotted this fair value gap, a small fair value gap. That candle's high to this candle. As you can see, these candles low to these candles high, we have that small gap there. So at this level, I did place my sell limit there, and yeah, let's do as I did. So I placed my sell limit there, with my stop of course being above this rejection block slide here. You can see these rejection block, these candles, yeah, these are rejection block inside these 3-hour fair value gap. Targeting of course was a 1 to 2, right? So I did have that trade, but you can see it was tapped into, but the market rallied higher. I was taken out of this trade during the first 30 minutes of my trade. So the market rallied higher, tagged me in, rallied higher, took me out. Then we can see it drop down. Then we had this retracement higher, also rallied back to the 3-hour fair value gap. Then you can see this huge drop down. Why do I usually take my 1 to 2 is like you can see over here the market could have reversed. If I could have been targeting this low, maybe all these weak constant encroachment with a 1 to 4 to 1, and then my stop would have been triggered, because I usually, after I've seen a 1 to 5 or a 1 to 2, I've taken a partial at around that zone. I usually trail my stop loss to break even. You can see my stop could have been hit, but I could have taken out something. That's why I usually like to take a 1 to 2, because you have peace of mind and everything has been tapped. So one thing I got to learn, so going back to the charts, to the main charts over here, I guess everything I've explained is over here. The pink line, I guess you can remember it, the immediate rebalance. For our immediate rebalance, I'll get rid of it. We have this 30 minutes fair value gap over there. You can see it. You can see where my stop was. You can see my 3-hour inversion fair value gap, the 1-hour inversion fair value gap, or fair value gap. I wanted it to be tapped into, then rally lower, but wasn't. Everything over there I've discussed was here. So I think what I did everything right, and my stop placement is what I'm getting to think about it, because by the my first stop was taken out due to spread over here took me out, and then we had this other trade that was meant to take me out, this other week, not trade. So my stop placement, I think, wasn't too bad. These are the things that we should be expecting, and we should be prepared for that, because losses are inevitable. And I was listening to Riz episode, and we had Kamide, was it Kamide? So one thing he said, we as traders should love losing, right? Why should we love? Because it's through losing, or it's through falling, that we get to learn something, right? Yeah, so it was a good trade and a good lesson from Kamide, from the words of wisdom, and also for me satisfied for this trade, because I did everything right, and my stop maybe was to be above the constant encroachment of these 3-hour inversion fair value gap. Maybe let's see if I could have had my 1 to 2. Yeah, so not bad, something worthwhile to learn, because I could have we have this week over here, maybe slightly above the constant encroachment. Yeah, so that's what I could have done, but it was a nice trade, a good trade, worthwhile of learning. And from let me take it back. Yeah, this was the trade, and was it what was yeah. So this was the trade. You can see how this candle put me into a little bit profit, because no, it was tapped into a loss, and I was taken out. I saw this rejection down, and I knew it would go to my stop, but that didn't happen. Rallied higher, took also those who had entered and placed their stop loss at around this zone. It took out them, then it rallied lower. So I'm also realizing something, and every day I'm talking about it, but I should take my time and spot it, because mostly when we have these rally lower to our direction, mostly it's a trap, right? Then we have now these other rally higher that clears this buy sell liquidity, because some traders have some sellers have gone in earlier and definitely placed their stops above that level, right? So they were taken out, then we had this drop down. So this is a given pattern I'm noticing, but yeah, learning from it, and will improve. So that's how price played out today, and something I had my lesson on my SL placement, and something I'm happy about. So guys, that's my video and my trade review. By the way, we had news at around 9:45. I was watching it, and I don't know whether I should be capitalizing on these opportunities, because I wanted to see price rally above this level, right? So at this level I was watching price, and I was seeing these candles being respected, this fair value gap here, and maybe next time I should have both trades in, and if I had taken my trade because I was expecting price to reach this level then sell off, I could have maybe had my 1 to 2 area earlier on. So I was watching this candle close, and as long as it closed bullish, then this the candle I could have waited for it to form, with my stop being below this low, or below the constant encroachment of these long wick, and targeting a 1 to 2, of course. Yeah, my trade could have been triggered, and a earlier 1 to 2. So yeah, I guess next time I should be profiting from other opportunities, not only wait for whatever I'm expecting. If I'm seeing price reach a given level from which I'm expecting a reversal, then I should be capitalizing, as long as it's in my New York, of course, time, and it's in the plan, or it's a point to which I'm expecting price deliver to, then I'm expecting a reversal. So it's something I should also be capitalizing on. So yeah, that was it for today. So thank you for watching this video. Thank you for being here. Please smash the subscribe button and the like button, so that it's yeah, it gives morale to those who are content creators and everything. So this is my review today, and something I've learned is concerning uh, the higher time frames confluences, and to which I'm expecting price to deliver to. For example, we have this overlap, meaning everything in the 4-hour time frame is balanced, right? Before that, we had this 3-hour fair value gap, which was not which was a key level for me. But everything above it, let's see, everything above was balanced. Only we had this 3-hour fair value gap. But dropping to the 2-hour time frame, we had this fair value gap that had been tapped into, but in the 1 hour we had a gap that had been left open. This gap that was left open. So next time when this pattern hopefully happen, I will take advantage, and maybe because it's a lesson worthwhile, I have learned today. So thank you for being around. Thank you for watching this video. Kindly like and subscribe to the channel. So bye bye guys.